All right, so we caught a good dub today. There was no news. Today was a no news Monday. There was news technically. Trump was supposed to speak today, but I guess he didn't. If he did speak, please let me know down in the comments just so I can know. I didn't see anywhere in my what was it Forex Factory, or I didn't get any news of him talking. So, but today was a really good trade. We executed what we were supposed to. We stayed patient and wait for the market to create some type of structure before entering. Today we had a bullish structure, or we had a bullish bias today. And the reason why we had a bullish bias is because kind of going into this trade, we'll kind of backpedal this a little bit. So going into the hourly, there was an hourly retracement that we had. No, it was a 4 hour hourly. Yep. So today we had a 4 hour retracement inside of this zone. And once I saw this retracement, I knew that we were going to be in a bullish structure, or I knew that we had bullish structure, and all this move was just a retracement. Going into this trade, like I said, I was very bullish, had a strong bias, and I was waiting for SMTs to be created. So in the market, go a little back just a little bit. In this trade, we had waited for an SMT to be created here. And once that SMT was created, we knew that the market would have to go up or go down. All I was waiting for was just a market structure shift to the upside. And once we got that market structure shift to the upside, that instantly let me know that, okay, this is what the move is going to be for today. Going into this trade, as you can see, we have this SMT, bullish SMT, and this was the leading index. The reason why I did trade the leading index today is because it had more value in the trade. Nasdaq normally tends to have more value, and it's easier to hit a 1 to 3 for me. I normally go for a 1 to 3 trade, and I can easily get that done trading Nasdaq. So SMT was created at 4:20 a.m. inside of the London session, and once we created these London session lows, ES didn't take out those London session lows until actually 10:47 a.m. So we created this market. 9:30 open is when we created that SMT, and once that happened, the only thing we're waiting for was just a market structure shift to the upside from these highs. This was I consider this a market structure, or I consider this a high. I consider this a high because, of course, when it comes to creating a high and low, you have to make a move up to a move down before making a high. And then whenever I'm going to the higher time frame, this was another high that was being validated. So this was the move up to move down, and that was the high I was talking about. Let's see if we can kind of get that straight. So we had that market structure shift, and we also confirmed that in the 5 minute. So before, what I was doing was I was waiting for a 1 minute market structure shift before entering into a trade. But then I realized that it's not secure enough, if that makes sense. And I tend to lose more when I take a 1 minute market structure shift rather than a 5 minute market structure shift. For some reason, I think is when it comes to the entries. I think that's what the main thing is. So I just kind of scaled up higher to the 5 minute and just waited for that market structure shift to the upside. I mean, in the 1 minute, okay, cool. We had these moves here. You know, once we got to this zone, so made the SMT, we closed above these highs, and at that point, I could have considered being like, okay, since we did close above these highs, then I can look for entry positions. And honestly, this would have been a good one. This fair value gap, if I was going off the 1 minute, I would enter off of this bullish fair value gap if we were doing that. But like I said, since we weren't doing that, and since we were waiting for the 5 minute to close above those highs, then we just had to be patient. So once we created this market structure shift, then I scaled back down to the 1 minute to find my entries. Normally, I go for entries that are inside of a discounted price range, premiums and discounts, or other people may say equilibrium. So at this point, only thing I'm doing is just looking for entries, and we had a couple entries here. We had this entry, which was just a fair value gap, but was something that I did realize is that we had an inverse fair value gap, and we at the time we respected this fair value gap, came back down, and then went inside the fair value gap, still respecting it. Once we close in this place above that fair value gap, now we have this as an inverse fair value gap. And honestly, I wanted at first I wanted to enter here, but I had to start paying attention to logic and paying attention to what the market structure truly wants. And we had a couple moves that the market was doing, and the only thing I was waiting on, see, we had here the market was respecting this fair value gap and still waiting for more confirmation that the market is going to go higher. We get a couple moves to the upside, which is no problem. But the only thing I'm waiting for now is just a retracement inside of this inverse fair value gap. And I was not going to enter into the trade unless the market was doing so. Something to back that up is we also have not even touched equilibrium yet. So I knew that, okay, since we have not came back inside of a discounted price range, there's no point in me taking a trade right now. Honestly, that's a good mentality to have because it's part of sticking to my strategy, and this is what's been working for me. It may work differently for everybody else, but this is what works for me. We had that retracement. It should be around 953 when that retracement happened. So it should be coming up soon. Yes. Okay, so we entered back into this inverse fair value gap. Not only did we enter back into this inverse fair value gap, we also had our moving averages cross. I only use moving averages as just an extra pair of confirmation, really, and just so I can show you guys. So we had, you'll be able to tell. I have for my moving averages, I have it set for an X bar to know when the market is, or a plus bar when the market is crossing. For example, as you can tell, every plus bar that you see is a cross in between the moving averages. And at first, the black is on top of the blue, and the black, my settings I have for MAs is the black one is set at 50, the blue one is set at 21. And only reason why I have it at those settings is just because of what other people have said and what other people think is best for them and their trading, whatever. Anyway, as you can tell, there is going to be a crossbar that pops up as the market enters into this inverse fair value gap. I can see there, once you saw that plus bar, the market has crossed together. And at this point, the only thing we're doing, market has came back inside of this inverse fair value gap, and we want to see how market reacts. If I'm being completely honest with you, I was not going to enter into the trade. I wasn't, because I kind of got a little timid and got a little scared, but I had to realize this is my strategy. This is exactly what the strategy is calling for. So once the market did that, I had to get out of my own way and press buy, because if I didn't press buy, I would have legit missed an easy trade for today. Market creates another bar inside of that inverse fair value gap. And as you can tell, but whenever I entered not when the market came inside of equilibrium, but as market is just above equilibrium. So we set our TP, oh, not 1,000. So we're going for a 1 to 3. And this is on a trading combine, so I am risking a little bit more than what I would normally want to. We are targeting these highs, and honestly, we're just letting it play out. So as the market played out, I did realize a couple things that I did. And of course, the trade was very good. It worked out really well. But something that I did mess up on a little bit is my risk management. At first, the market did come into the zone to where it was going to hit this key level. And I originally was going to go for a 1 to 3, without a doubt. But the only reason I did not go for a 1 to 3 today is because, one, I'm in drawdown. So at that point, once the market had hit that key level, I was just going to take profit, because today is Monday. There wasn't no news. There was supposed to be Trump speaking, but he didn't end up speaking. And if you think about it, ES was straight chop nation. Straight chop nation. Like, this is just terrible price action. You can find a way to enter into this trade, but there was just no way I was going to take a trade in ES today. No way. Nasdaq had the better price action for today, and I ended up taking that trade. And the market still, it needless to say, I had gained, I think, $780 for today, which is really good. But anyway, the market came back into the zone. At this point, it's a 1-2, and we are in profit, floating at 1,200. No, it was 1,050, 1,050. And I was going to take profit, but what I ended up doing is I ended up moving my take profits a little higher. So this zone, let's say this is my break even point. So I move my I move my stops to break even once we close above these highs, because once we close above these highs, that's showing that there is, and Trump just got news about Trump. Trump says gold will not be tariffed. Cool. I don't even trade gold. But yeah, so once we close above these highs, then I move my stops to break even. And at that point, I was kind of just scaling. I originally told myself, once the market reaches back into this key level, the only thing I'm going to do and look for is the only thing I was going to do was just trail at a very tight stop loss. And I didn't really do that. There was this fair value gap that was created, and I honestly set my stops below this zone, or originally it was this inverse fair value gap that we had, and I moved my stops to above that. Once we close above these highs, then I move my stops higher, and we're here. And honestly, what I should have done instead was just taking full TP, or not full TP, but just taking that 1-2 for today and calling it. But it's not. It's. I want to say there is some greed that was still being presented in the trade, but at the same time, I think with the strategy, I knew that my trading Nasdaq, I always hit a 1-3 with this strategy, specifically this strategy. So I guess you can call it greed, but I think it was just really just trust and belief in myself that I knew it would work out. But anyway, we ended up getting stopped out. Needless to say, we ended up getting stopped out, and I want to say, where did we get stopped out at? Let's see, because I think it was in one of these zones. Because this is the retracement that we're having right now. Okay, so yeah, so we got stopped out at, I think it was here. Either way, we got stopped out, and we ended up taking that profit for today. But something that I did realize is that for this trade, if I had just kept my take profit to break even, then I would have hit full TP of a 1-3. But it's fine. I'm glad that I was able to take that trade and take some profits, because we were in drawdown. We're not in drawdown anymore. So now we can really focus on taking even more A plus setups. I told myself this whole month is literally me taking A plus setups. That's it. And if I can't see my strategy forming, or if the strategy is not being presented into itself, if it's not correlating with market structure, I'm not taking the trade. And I just realized that just with all my journaling I've been doing, I've been making the same mistake over and over. And if I'm being completely honest with you, it's not about over leveraging, and it's mainly just about waiting for the market to correlate with my strategy that I do have. Anyway, that's all I really have for today. I may or may not do another one tomorrow, but we'll see. Like I said, I'm gonna do more of these. Anyway, that's all I really have. See you in the next one.